Welcome to yet another episode of Disruption Talks, where we meet the world's leading experts in terms of tech and not only. So, today we will be touching upon the subject of a transition, a change. Um, I remember there was an article and a podcast from A16Z, the Anderson Horowitz Fund, back in the year of COVID 2020, where they claimed that eventually every company will be a fintech company. There will be no excuse for not having some sort of payment solution, either being provided as a product that you take off the shelf, or there's something that you have embedded within your own product. So for the customer, they're dealing only with your company. And joining us today is the CEO of Rize, Justin. And Rize is building the AWS for financial services. It allows you to have all the building blocks that you might ever need embedded and embodied in your product, whatever that product is. Right, Justin?
That's correct.
Okay, so Justin, I'm glad to know that I've done my homework correctly and glad to have you here.
Great to be here. Thanks very much for the opportunity.
So, listen, typically we would love to learn about the person to begin with, because that will lend us a lot of context. So, uh, before we hear from Justin, the CEO of Rize, let's hear about Justin becoming the CEO of Rize. What's the background story before being able to jump on a call like we have right now? What led you to Rize?
Sure. Well, I've spent about half my career in the private equity and hedge fund worlds, places like Bain Capital and Perry Capital, and the other half has been building companies. I figured out pretty early on in my career that I like building and operating more than I like investing, but I had pretty terrible timing because I graduated from college in 2001 and then business school in 2008. So 2 for 2 into the last two big downturns, which meant that I had to do kind of non-startup-y things for periods of time. But Rize is the third company I've been part of building. Second one I co-founded, though I'll tell you, I had absolutely no intention of ending up in this space at all. Literally to the level of the one constraint that I gave myself when I left the hedge fund world to go build something again was I would do anything except for financial services, which has clearly backfired spectacularly, right? I just felt like at that point in my career, I'd already done a bunch of stuff in finance that I just wasn't very passionate about. And money stresses me out. So why would I want to think about it 24/7? What dragged me back into this world, somewhat kicking and screaming, is the fact that my parents, like so many people, just got absolutely crushed in 2008, 2009, the Great Recession. And I ended up spending about 5 years working with them to get them back to the point where things felt pretty stable again. And that led to this question of, well, how screwed up the things have to be in this industry if this is going to be the outcome for two highly educated people with great jobs who have all the things going for them. What does that mean about everybody else? And that kind of led directly to the early stages of Rize, though, where Rize is today is quite different from where we started.
Okay, so essentially a dedicated entrepreneur, well-versed person in finance who vowed to not return to finance, but like a rolling stone, here you are again in perhaps, perhaps, I mean, the conclusion that I'm coming to is actually that you fix what tended to perhaps not make you so passionate about finance, about making it much more accessible, making it much more, that you can handle it without all of the things that perhaps didn't cause that much joy as expected at the beginning of your career. So the founding story behind Rize, if we could get the baseball on that.
Sure. Well, as I said, it started with the experience I had helping my parents out. And my co-founder, Kirk, and I got together originally because we shared a vision for a much more customer-centric and intuitive approach to financial services. And you're right, I had to find the kind of through line that I could be passionate about on this stuff. And the problem that we really wanted to solve was, how do we bridge the gap between this crazy industry that is regulated into all these different silos, things like banking, brokerage, lending, insurance, now crypto, but those don't really map very well to how people think about and use money out in the real world. As end customers, we don't see those distinctions between those different verticals, despite the fact that within the industry, they really don't ever talk to each other, right? That's the problem that we wanted to solve, because that mismatch there is really the source of all the complexity and confusion in financial services. In many ways, the way that embedded finance, that I think we'll talk more about today, is starting to develop, of how can you take financial experiences and embed them in intuitive existing experiences where they make a lot of sense. That's kind of how we thought the world should work. But when we started 5 years ago, that wasn't even a concept, right? What we understood were the consumer pain points. And so while Rize today is a platform, an infrastructure platform serving other fintech builders, we actually started as a consumer fintech, right? We built automated saving, we brought investing into that, we brought banking into that, because again, we envision just a much more seamlessly integrated set of products and services where we're starting to knock down those distinctions. Because again, for an end customer, this is all just money, right? You don't really care how the engine works. You just want the car to go from point A to point B. And what we discovered in all this was what we had originally thought was a UI UX problem was actually an infrastructure problem. You know, to build the intuitive financial user experiences that our customers told us made sense, we ended up having to build an immense amount of the kind of missing horizontal connective tissue, the service layer infrastructure, that could take this much more intuitive approach to building financial user experiences and map it down to the underlying regulated building blocks of different account types and payment rails and compliance screens, really across multiple financial verticals, in order to make that possible. And as we went and talked to a lot of other fintech builders, we discovered that pretty much everybody was running into these same infrastructure problems over and over again, having to recreate the wheel and doing it badly, right? This was kind of like building in internet and cloud before AWS came along, right? There you were just trying to bring a new website into the world, but you had to, raise $30 million and buy and manage all your own servers to do it. In our world, it was, you had to find a bank to integrate against, a processor to integrate against. And then there was all this compliance stuff that you'd never even heard of before. Well, it turned out that what we had originally built for ourselves to solve that problem of how do we operate across multiple verticals was a much more flexible and elegant solution to these infrastructure problems than anybody else had done to date. And so we ended up pivoting the business starting in late 2019 from being a B2C fintech builder to becoming a platform that supports other fintech builders around these core infrastructure elements. So we're the only player in our space, at least in the States, that's been on both sides of the table, both a builder now supporting other builders, which I think continues an interesting trend in this space in fintech infrastructure. You look at other very successful companies, Drive Wealth, brokerage started B2C before they became B2B. Plaid, started B2C before they became B2B. I think this is a unique space where if you haven't been down in the trenches experiencing the pain of bad infrastructure yourself, it's hard to build the infrastructure correctly.
That is a very fair point and universally applicable, even not within industries of tech, but it always helps if you run the manufacturing plant, if you spend some time at the conveyor belt, understanding what it's like. And so it seems that the metaphor drawn at the beginning, that Rize is building the AWS for financial services, also rings true from a commercial standpoint, because much like AWS was their cost center that was turned into a revenue center, similar story here. It was something that you were trying to utilize as your product for people, but actually it seems that more people are interested not in the B2C but B2B front. Well, hopefully maybe eventually a B2C app from Rize somewhere on the horizon too.
Yeah, we'll see. We don't have any plans right now, right? We're not in the business of competing with our customers, but we'll see someday, right? And I think you're exactly right. In each of those spaces, there's AWS in internet and cloud, or Shopify in e-commerce, and what we do in fintech. Infrastructure is critical to these businesses. You can't run the business without this infrastructure, but it's also not the business of these companies, right? You can't run Netflix without AWS, but Netflix is a content company. That's where they want to spend their time, not on all the underlying, plumbing. Similarly, in our space, people are coming to market with innovative new products. Can't do it without connecting to a bank or a processor, but that's not where they're going to drive value for their customers or for their investors or what have you. They need to be able to focus entirely just on building the right user experience, building the right product, getting the right customer acquisition, things like that.
Yeah, so seamless and speedy is the value proposition, I suppose.
Yep,
Because
exactly.
I'm a content company, I'm a whatever company. I'm not in the business of understanding or figuring it out. I'm in the business of making it work for me and my customers.
That's right. That's exactly right. We like to say, we'll get you to market faster with less effort and better economics, right?
absolutely. Something that is the bread and butter of any and every founder, either now or some way back in the past, especially when they were just making their first steps. So on your LinkedIn profile, we can read passionate about working with and building companies that are tackling meaningful problems. I'm curious, how does Rize fit in this picture of meaningful problems of recruiting top talent using technology to drive innovation, especially when you mentioned that pivot? Was it a simple pivot, or was it something that, it was a sharp U-turn essentially?
It had elements of both, right? So the reason that we made the pivot was because, we started to see a bunch of other builders coming to us and saying, hey, could we just use what you guys have built, right? Seems like it would solve a lot of our problems, right? So we started to hear that signal a little bit, but even with that, we weren't quite 100% committed to making that pivot yet, right? What finally helped was we had a real forcing function. We were just about to launch the first banking capabilities in our consumer product. We'd been working with an early banking-as-a-service platform here in the States to do that integration. And just as we were about to launch, the bank that they were working with in their platform effectively melted down under compliance deficiencies. They had gone from 18,000 accounts as a small community bank to over 2 million accounts working with a bunch of big fintechs in about 18 months. And when the regulators came in and looked under the hood, they said, look, there's no control in this system. We're not going to let you do this, right? Which meant that we were not going to be able to launch that product. And which was a real, we're on the ropes, hang by a thread moment for the company. And we just decided to say, all right, we now know we know exactly why this happened. We know the missing pieces around compliance. We know how to do all the infrastructure stuff. We've had to build something very unique for ourselves. Let's just go all in and see if we can take that knowledge and know-how and turn it into the business that we wish had existed when we were starting to build, right? And we were fortunate that we were able to find some brave investors who were willing to get behind that vision and our ability to build stuff to give us the opportunity to do that. So it was not an easy decision. And it's not one that I'm sure we would have 100% made had we not had that forcing function. But as soon as that came, it was a fast process. Like, all right, this is the path forward. Everybody's got to get on board with it. We've got a bit of fuel to be able to make it happen. Let's go. And that turned out to be very much the right call for us as a business.
From what I know, venture capital or private equity, the concern is that if you're a founder and if you haven't pivoted, that means that there was something that was missed, right? Something that was not noticed. That if you haven't pivoted, something is off.
Yeah, sometimes it's a mini pivot, sometimes it's a major pivot. I think you're right about that. The few businesses that I've seen that really kind of go from the very beginning and scale quickly to exactly what the founder expected are usually only repeat founders who know a space very, very well and have been able to take not only their understanding, their knowledge of the space, but everything that they've learned in previous businesses and kind of not make the same mistakes the next time around, right? And I've seen that happen once or twice, but it's usually because somebody knows exactly what they're doing. For us, the process of building this business, while I've done some before, was incredibly humbling and has been incredibly hard. And it's just now starting to work, 5+ years in here.
Okay. If there's anybody watching this who knows exactly what they're doing, call me. I need to talk to you. I'm not sure that there are many people like that in any regard. So was the pivot the most challenging turnaround situation that you had, or was there something else that you can reveal that was also equally cumbersome? Or
I think that was by far the hardest thing that we've had to do, right? Of really being able to take a hard look in the mirror and say, this is our one shot forward. Do we have enough conviction that we know what we're doing here and we've got the right team to do it, that we should continue? Or is this the right time to put the business down, right? Because, I think one of the things that certainly I have lost track of at times in the course of my career as an entrepreneur is, that the single most valuable thing that you have is your time, right? And sometimes continuing to run through walls is maybe not the right thing. And sometimes it's better to put it down and start afresh, right? But In this case, it was the right thing for us to do, but it was hard because we had to convince the whole team that it was the right call. Right? We had to let some people go, particularly because we built a business around consumer. Right? Now we're becoming a B2B business, and so that was particularly difficult. And we had to, we couldn't just go do it. We were kind of nearing the end of our runway, and we needed to go out and get some additional capital in order to give us the extra fuel in the tank to be able to make that pivot. And that was a real process too. Again, it took some brave investors. So I think that's definitely the hardest thing that we've had to go through as a company together. Certainly not the only hard thing, right? And I think some of the stuff that we deal with now, it's a new set of problems as you're really starting to scale the business. But there's always problems, just because we now have, a lot of fuel in the tank and a great runway and a great team. Now we've got all the problems of scaling. How do you take a larger and larger group of people and make sure that everybody's pulling oars in the same direction, right? So the problems are always there. It's just the nature of the problems change at each step of the ladder, right?
And when you mentioned a second ago, it took brave investors. Are you speaking to the previous rounds or to this round? Both?
Both. I think we've been very fortunate in the history of the company. As I said, it's been a hard road for us. We've been very fortunate, though, that at each of the key junctions of the company, we had at least one investor who was willing to stick their neck out and make a brave decision on things. And that's happened kind of 4 or 5 times in the course of the company right now. And I think we've also been very fortunate that we've always had a really not only supportive, but really value-added set of investors who are willing to come in, not just put their capital behind the business, but really assist in a variety of areas, whether that's making good introductions from a business development perspective, providing a lot of insight in terms of kind of management of things. And, we've been able to keep kind of stacking those folks up. And hopefully we can keep that streak alive.
And speaking on money furthermore, congrats, of course, Series A. Any tips on anybody in a similar situation pre-Series A? They want to approach the stage of finding a right partner for the capital. Of course, your answer will be specific towards Rize and the fintech, but I'm pretty sure that there are some universal principles that are applicable, even if I'm doing the next pet app or anything, right?
Yeah, I think a couple of the things that come to mind. One is to really understand what the milestones are in your business and how investors are thinking about that kind of stuff. Because nothing is more painful than going out thinking you've achieved a set of milestones, or going out because you're running out of money, but you discover that you really haven't achieved what is that next level of investor is looking for in terms of the milestones that are kind of proving to them that you're the right bet. Right. And so if you can really, whether you're pre-seed, your seed, your A, you're always raising for that next round, right? The round after the one that you're actually raising right now. So if you can understand, hey, in order to get a Series A in my space, investors are going to be looking for, this particular set of milestones, this type of team, this level of traction. And understand that particularly if you're in a space that is moving quickly, like fintech, those milestones are likely to change. I remember on the B2C side of things, when we were on that side of the world, there was a time when you could get a slam dunk seed round done if you had like 5,000 customers, right? And then, 9 months later, it was 10 to 15,000 customers. And then you needed to be able to have, 25,000 customers before you were going to get that same level of funding. And so you've got to understand what you're aiming for. Right, that's one piece I would say. Second piece is to really figure out how to tell the story effectively. This is, I think, particularly true in businesses where there's a lot of complexity. Work with people who are good storytellers to figure out, all right, how do you pull out the little bit of the through line, the couple things that you want somebody to walk away from a first conversation with, and be able to kind of hammer those points home. And then one thing, a third piece is, figuring out how to split the line between getting to know investors early, but not necessarily, ruining the opportunity for a first impression. What I mean by that for us as a business, where it took us a while to get to this point, we definitely made the mistake sometimes of talking to investors further down the line way too early, And when we had some struggles and we kind of went through a pivot on things, a little bit tainted, right? Like, oh, we know a little bit too much about how things have gone here, right? Maybe it took you a little bit too long to get to this point, versus getting to come in and meet some investors for the first time when we've got our ducks in a row. We know what we're doing. We can really tell the story effectively, and they don't have to deal with any of that baggage. That can be really effective. So again, it's a bit of a split between sometimes the best investors that you meet are ones where you've got to know them for 6 to 12 months. They've had the opportunity to kind of watch the team execute and see how you're doing. That's all well and good, but don't necessarily be talking to Series B guys when you're at a C level, right? Take the time to match the right conversations you have to where you're at as a business.
I can totally see that. I mean, you don't want to put in the extra effort on your back of having to justify everything that was and not what is, and cleaning up the initial impression, even though that impression was necessary to get where you are right now. So
exactly.
But that was what to look for. Red flags.
Ooh, red flags. The problem with fundraising is that first and foremost, you need money. Right. So, and the reality is the vast majority of fundraisings out there are not what you hear about from like Silicon Valley and Y Combinator and that kind of stuff, where you've got, tons of people competing over throwing money at you. Like, if you find yourself in that position, good on you. Fantastic. But the reality is, in most cases, that's not what it's like. Right. It's a numbers game. You got to keep going until you find the right guys. So first and foremost, if you have one offer and that's what you need, take it, right? You just need that fuel in the tank. If you find yourself in the fortunate position of having multiple offers or multiple folks that you can work with, then it comes back to all the normal things. If you get kind of a bad first impression, if you just have a gut feeling about the interactions you've had with an investor, some things kind of tickling your spidey sense on there, or if you've just had a relatively bad experience, like, don't expect that the experience is going to be different once you have their money. If anything, it's going to be harder and worse, and it's going to be a further exacerbation of what you've already seen because now you have their money, right? So if you feel any of that kind of stuff as flashy or as amazing a name might be or something like that, if you're comparing a big name as flashy, but you have a sense like, man, I'm not sure how this is going to go, versus somebody where maybe they're not as big a name, but they're really saying all the right things and spending time with you and your team and getting to know you and showing that they're really interested in spending time with your business, take that second one any day of the week, right? At the end of the day, money is fungible, but finding somebody who's actually going to spend real time with you and be value added to the business is so much more valuable than just taking money from somebody. So my overall thing would be listen to your gut. If you feel like I'm not sure that this is going to be a good fit, you're probably right. And if you take that money, you'll kick yourself further down the line.
Solid advice. So now let's proceed to the company in question, Rize. So we've heard a lot about the upcomings, the pivots, the right now. What about the future? What's 2022 got in the cards for Rize?
Sure. Well, look, 2021 was a pivotal year for us because this was the year where we finished the pivot. The whole platform actually kind of came live, signed first customers, raised our Series A. The kind of the theme of the year for us as a company was transitioning from building to operating, right? We became really good at building stuff. Now we needed to make sure that we were not only good at building and continuing to put new features out there, but actually operating the business, because it's a complex business that touches a lot of different pieces of things. And ultimately, it comes down to our customers having a great experience building against the platform, getting live, et cetera, et cetera. 2022 is, the theme of next year is really all about growth, particularly on the back of the Series A. The team is growing quickly to handle all the demand that's coming at us. We're growing the size of the business just in terms of the number of customers who are building against the platform significantly, right? And having to deal with, I was talking about earlier, like, how do you deal with all those scaling problems in a complex business, right? How do we make sure that just because a customer has to go through a relatively complex onboarding process for us internally that includes, legal onboarding, actual technical onboarding, and building their product, right? Compliance onboarding to make sure they understand kind of how things need to be done. Even if that touches a couple different teams within Rize, from our customer's perspective, that's all just Rize. It's all their experience with us as a company. So how do we make sure that that is as smooth as it can possibly be, right? As we continue to get bigger and bigger on things. And then, we've got a very aggressive product roadmap, right? We're already starting to move outside of our first vertical, which has been banking, and now we're starting to cover brokerage as well. And, our vision is to be pretty quickly operating across a variety of additional financial verticals. And so some of that stuff is going to start coming up for us in 2022 as well. So, the theme for 2022 is how do we grow and scale, give our customers a great experience, and continue to push a really aggressive product roadmap that really takes advantage of some of the core differentiation that we have as a business around our kind of core technology and our synthetic account technology and things like that, where we're in a space that is getting more crowded, it's getting more competitive. How do we really kind of carve out our own niche and provide a lot of differentiation while we're doing all those different things at the same time? So combination of how do we focus, but also grow quickly, right?
So I've got your Rize synthetic account PDF back from 2019 open, because I want to make sure that it's. I mean, just for the verbiage, I want to make sure that we can speak simple English, or even Reddit's explain like i5 format should do a good job here, because I'm reading here Rize's patent pending synthetic account technology, allowing for the creation of completely new customer-centric financial products and services freed from the limitations of traditional regulated custodial accounts. So for the common man, that would be me, in plain English, what does this exist in opposition to? What is the incumbent if this is the innovation?
Yeah. Well, again, if we go back to the original problem that we wanted to solve as a business, right? We wanted to bridge the gap between this highly regulated industry that ends up in these different silos, banking, brokerage, lending, insurance, to a world of end customers like you and me that really don't think about those distinctions very much, right? We wanted to solve that translation problem, that many-to-many problem. And so the incumbent way of doing things is that innovation in this space has always started with the way that the industry approaches it. It's always stayed in these verticals, right? So the fundamental building block unit in the fintech world is the custodial account, right? It's the underlying regulated account. It's a bank account. It's the brokerage account, what have you, right? And it's very limited in terms of what it can do. There's all these rules around a checking account. Can only hold cash, can only do certain things, right? There's all these rules around a brokerage account in terms of how things go. But those rules make it very difficult to then map what you're trying to build to the right intuitive user experience, right? So I'll give an example of this kind of stuff. For here in the States, you've got a whole bunch of very successful now consumer fintechs. You think Chime, you think Acorns, companies with 15 million plus accounts. And yet they have an immense amount of difficulty starting to move horizontally. Adding capabilities in new financial verticals. And that really comes out of the rigidity of these structures. If you're, Chime, for example, starting in banking and you want to add brokerage capabilities, you got to find a whole new set of vendors in that world. You got to build a whole new technology stack on top of them. Then you've got to learn a whole new set of regulatory compliance. And even after you've done all that work, you're still missing the kind of horizontal that allows those pieces to talk to each other. Right? You'll talk to these guys, it'll be wild. They'll say things like, there's no real concept of like Justin as a customer in our system. We can see that Justin, corresponds to a bank account over on this side of our world. Maybe he's got $1,000 in there. And he corresponds to a brokerage account over on the brokerage side of the world. Maybe he's got $500 there. But that never actually, there's no way for us to really see that Justin has $1,500 in our system, right? Just touches different parts of the front end. It's kind of crazy, right? That's how siloed these pieces are. What we realized with Rize was we wanted to just focus on, here's the right intuitive user experience for our customers, right? Let's start with that. Let's start with the customer. and work backwards. What would happen if we redesigned financial services from the way that customers think about the world, worked backwards to the underlying different account types and payment rails and compliance schemes that are required to power that stuff? What we realized was, in order to do that, in order to create a world where you could really focus on user experience first and then have the infrastructure support that, instead of starting with the infrastructure and then saying, well, I've got all these constraints, what kind of user experience can I build on top of that? We had to move the building block from being the underlying regulated account to a set of master ledgers that were designed to operate simultaneously across multiple different verticals that could reach down to banking and add those capabilities as needed, that could reach down into brokerage and utilize those capabilities as needed, but would allow a builder to just focus on, here's the right user experience. So that's a long way of saying the synthetic account technology is a set of master ledgers designed from the ground up to simultaneously operate across multiple verticals, add any capabilities that are needed over time, and allow builders to focus on just building the right user experience. What it means practically for us as a platform is that as we add additional capabilities across new verticals, nothing has to change about our core infrastructure in order to accommodate that. Right? We don't have to go through the crazy rigmarole that Chime has to do or Acorns has to do because of how we architected the system. And from our customers' perspective, building against the platform, they don't have to change any of their build as they want to access new capabilities or as we bring things online. Effectively, we just gave them a new set of switches that they can turn on, right? So you can kind of think about a synthetic account as a super account that, you know, is your basic building block, but instead of just being limited to banking capabilities or brokerage capabilities and with that, you can combine all those into one piece. And the reality is, our customers building against the platform, they don't really care about what synthetic accounts are. They don't care how the engine works either, right? What they care about is the flexible set of capabilities that we give them then the ability to easily operate across multiple verticals simultaneously. So that, I don't know if actually that translates into simple English on things, but it really does provide the solution to that many-to-many problem of just saying, hey, builders, come in with the right user experience you want to build. Our system will automatically map that down to the underlying different pieces of infrastructure that are required to power that. And now you really don't have to think about those distinctions all that much.
Perfectly fine with regards to my level of simplicity necessary to comprehend this. So thank you. That worked. I mean, what was the aha moment in all of this was pretty much the moment when you painted how the current system refers that an account understands that that another account can have a point of reference as the customer, that this responds to a specific person, to a specific account number, instead of revolving around that person and all of those products responding only to that person. So,
you know, it was interesting. The history of this to some extent was we originally started, as I said, on the consumer side, we built some automated saving technology, and we wanted to allow customers to be able to, you know, take a single account and break it into a bunch of different pools. You know, I want to put some money aside to buy a new car, some to take a vacation, some for taxes, what have you, and just be able to basic sub accounting, right? It's been pretty standard within our world for a while. But then we realized that as part of that, as we brought investing into the platform, we also wanted somebody to be able to say, hey, for like a slightly longer term goal, right? Like, you know, saving to buy a house a couple of years out, I may not just want to have that sit in cash. You know, I'd like to have that sit in a combination of cash and investments, right? And in order to do that, we needed to start figuring out how to bridge across, you know, both banking and brokerage capabilities, but have it roll up to like one thing that made sense to the end customer. Oh, this is the money that I'm putting aside to save for a house, right? And once we started figuring out how to do that, we suddenly realized the aha moment that you talked about was one day realizing, you know, this set of ledgering that we're building up here to be able to kind of map across these different pieces, that's actually the key. If we suddenly start to think about that's our building block, right? Not the underlying bank account or the brokerage account. That actually solves this many-to-many problem that we're always looking to do. If we suddenly just say, you know, let's flip the source of truth from being down here to up here. And it was one of those kind of very subtle shifts but one that fundamentally changed how we built the entire architecture of the platform and how we built the entire architecture of the business. To go back to that Amazon example, when Bezos and them say we start with the customer and work backwards, that's a very simple concept, right? It's a very, and yet they're really the only company in not only online e-commerce, but a lot of things that have been able to, successfully and repeatedly do that. Start with the right end user experience and figure out how to build backwards to do that. Similarly in our space, the idea of let's not start with the underlying regulated verticals and build forward on top of that. Let's not just say, hey, it's hard to integrate into a bank. Let's put an API layer on top of that and call banking as a service, right? But instead, let's say, how do we figure out what are the right experiences, financial user experience for these end customers, and work backwards from that? It's a fundamental shift in terms of how you think about and view the infrastructure pieces that you're dealing with that to date, we've not found anybody else who kind of thought about it that way. But it really gave us an advantage in terms of building for a future of embedded finance use cases, of multi-product use cases, of seamless interoperability across these different pieces where it really feels like the future is going, right? And we're now particularly well positioned to kind of enable a lot of that future because we took things in a very different direction.
And speaking of direction, segue into the industry prism. So just talking more about concepts, less specific about Rize. But of course, please do draw examples on the basis of Rize. We are looking here also for your industry expertise. We have a couple questions from the audience, a couple questions from me. Maybe let's entertain one or two. I mean, the general question is going to be major technology trends that will shape fintech. And the following questions are going to be just narrowing down in how specific they are. So let's begin in general.
I think the two of the biggest ones, right? One is this concept of embedded finance, right? It's a term that gets thrown around in the fintech world all the time. The idea is that you're taking financial capabilities and embedding them out in what have been traditionally non-financial user experiences, but where they intuitively make a lot of sense. And so like the classic example of embedded finance would be Uber, right? Part of the innovation around Uber was the fact that you could call a taxi right from your phone. It would come right where you are and pick you up. But a significant part of what made that user experience so great was they also embedded the payments directly in the app. So you never had to pull your wallet out. You never had to have cash, right? So that's a kind of a perfect example of like early embedded finance. We're now starting to say, I think we're very early innings on this, just starting to scratch the surface of what truly embedded finance looks like. I think, whenever you make a transition into a new way of dealing with technology, the first couple waves kind of look like the old technology in a slightly different form. So you think about like when mobile first came out, the first mobile websites were like your desktop website that got squished into a smaller screen, right? And it took a little while for designers and builders to figure out, what are the things that you can uniquely do in mobile that you just can't do, in a normal desktop type experience. I think we're starting to see some of that where the first examples of embedded finance were kind of basic payments type stuff. And people think about as well, am I just going to embed a bank account and all these different things? But we're starting to now see some interesting examples of, for example, a lot of different vertical SaaS companies that are focusing on different niche audiences, oftentimes kind of starting with payments on things, and then slowly but surely working themselves down the financial stack of saying, hey, if I'm building a platform for, I'll choose a random example here, for fitness professionals, right, to be able to manage kind of their videos and their audiences and things like that. And then I start to add payments in there so they can get paid by their audiences. And then they start asking me, hey, you're managing an important part of my business. You're helping me get paid. Could you give me a bank account too that could allow me to track my expenses and really kind of run my business more effectively? We're starting to see a significant number of opportunities along those lines in very different industries, but starting with situations where somebody's built something valuable for a niche audience in a specific space, and they're now seeing real opportunity to come in and add financial capabilities on top of that. I think a significant part of our business at Rize are new build fintechs, where the financial piece is like the main part of the product. But if I look 5 years out, I think the biggest opportunities will be a lot of the embedded finance ones, non-financial companies that are finding more and more interesting ways to embed financial capabilities within their existing user experiences that will, in many cases, probably look quite different from what we think about traditional financial services being. You won't think about these things as a bank, but there will be some underlying capabilities that are driving a really interesting part of the user experience there. So that's kind of one major theme. Second major theme is kind of what's happening with crypto and decentralized finance, DeFi, right?
Hold on. The next question is about that. So let's not
Okay.
exhaust that one. Just curious if there are maybe any other trends. Let's keep DeFi and crypto and everything else just in a box for now. Yeah.
Yep. I think the other major one is multi-product fintech, right? And what I mean by that is some of what I've been talking a little bit about, right? Where you see financial companies, fintech companies that have started with one particular vertical. Maybe they started in banking, or maybe they started in brokerage, but are now wanting to kind of surround their customers with a much wider and more seamlessly integrated set of products and services. And I think you're even seeing that very quickly with new build fintechs. Like, you don't see a lot of companies in the quote unquote neobank space who are coming out and trying to recreate the generalist experience that a Chime in the US or an N26 or Revolut or Monzo have done over in kind of the UK and Europe. But you are starting to see a bunch of new build fintechs that are coming out and saying, hey, I want to build starting with a banking experience, but for a very specific audience. Here in the States, it might be college students, or it might be military, members of the military, or something like that. They're saying, I want to come in and tailor some financial experiences specifically to this audience that might have some pretty unique kind of financial elements to them. But that's the stepping stone to, I want to be able to tailor a whole bunch of different products and services. So I really can be the primary financial hub of their entire life. And if you think about it, if you do a good job of designing user experience for a specific audience, you should crush, not only versus the traditional big financial institutions, JP Morgan, Bank of America, Wells Fargo in the States, all the traditional guys in Europe, but you should also probably do a really good job against the generalist neobanks, the Chimes and the Acorns, the N26s of the world, by doing just a really great job of building user experiences for specific audiences. And so kind of everybody is coming in and saying, I want to be able to start here and quickly move horizontally, and do that much more quickly than maybe the first major wave of fintech companies did, where it took them 5, 6, 7 years to get to the point of just doing the first thing. And now they're trying to figure out how to do more.
I wanted to talk about two things, just trying to make sure I don't remember either of them. In reverse order, what you just mentioned about those extremely scenario-specific experiences in fintech. We have had the utmost pleasure of having at least 2 representatives of what you're talking about. There was Tomorrow, Inas Nureldin from Tomorrow. That's I believe it's a Germany-based bank that focuses on people who focus on sustainability whenever they manage their money, the impact of where they keep their money, how they invest it. And another one, I think a more recent episode, was with Asya Bradley, who is the founder and CEO at First Boulevard, which in turn is a Black banking first platform with a lot like that episode is one of my favorites, of course, after this one. So yeah, that was the first thing I wanted to refer to. And the second thing I was hoping to refer to was when you mentioned Uber as an example of companies building around fintech solutions. I know also from another COVID year 2020 podcast with the CEO that they were considering going much further into such ideas, not maybe developing an Uber bank, but allowing every driver who doesn't have a car to go through Uber, through a financial service, to be able to get a car, because that's when they actually can be an activated user on the Uber platform, right? So what comes to my mind as a conclusion is that if we have even the tiniest thing that you do in terms of allowing a fintech solution product feature in your app that perhaps is not the immediate connotation with that, then that's such a wedge, such a foot in the door, that it's basically begging for developing more and more features that take care of that for the customer.
I would completely agree. You know, it can be a very small wedge to begin with, but if you do it well, it really becomes a stepping stone to open up a lot more possibilities for you, right? And I think the key for a bunch of that stuff, because, you know, Uber is a great example where they were going to go down this path and then they've pulled back from it a bit. I think that's partly because of some wider issues that they had at the company, but I think it's also indicative of the fact that, you know, you have a lot of companies that do want to come in and embed financial capabilities, but they don't necessarily want to have to become a full fintech in order to do so, right? And I think my sense is from outside the company that Uber pulled back a little bit from some of that stuff because, you know, they were pretty early to that game, and actually they were looking at a really big lift on some of that early infrastructure to be able to do some of this kind of stuff, and said, given everything else we need to focus on, that's a little bit of a bridge too far. You know, what platforms like Rize are now allowing is to say, you know, the amount of lift that you have to do in order to be able to embed these financial capabilities is really getting quite low, right? So you can really think about doing that without having to say, well, I guess now we're a fintech, right? You know, it needs to be something that's a small addition that opens up a new part of the chessboard, as opposed to, well, now I've got to basically commit myself as a company to becoming a full fintech. And that's pretty hard to do, right? It's not something a lot of non-financial companies want to get into the middle of, right? Because it's a pretty, financial services is a pretty, it's a pretty scary place sometimes when you're having to deal with all the regulatory compliance and all the restrictions around that kind of stuff, if it's not your main business, right?
Actually, I think that the value that is a plus for the economy in general is that the more you simplify all things that could be concerning on the exact front that you mentioned, you are making sure that all the entrepreneurs who had an idea didn't get scared of all of those constraints that you are trying to simplify. So right. that needs to be recognized as well. So now we are going back into the box of DeFi. What is the space where open finance will directly compete with DeFi? What are the pros and cons of these approaches, in your opinion?
Yeah, you know, I think, as I said, what's happening with crypto and with DeFi is I think one of the major trends in this overall space, and will probably becoming a defining trend in the course of the next couple of years, right? And I think part of that is you can kind of think about open finance, which was the forcing the traditional banking and financial institutions to open up their data and allow more customer control over that and start to pull a lot of those kind of pieces together. So companies like Plaid and MX and a whole bunch of the ones over in Europe that do a lot of those kind of pieces. And then you've got this idea with DeFi and decentralized finance is saying, well, maybe there's just a totally different approach to this stuff, which is you don't need those original financial institutions at all. Right, it'll operate across these decentralized financial ledgers. A lot of times, those pieces are talked about in opposition to each other. Right, one or the other is better, you know, but they're kind of fighting against each other. And I think the reality is that the much more interesting place, particularly right now, is the intersection between those different places. Right, I think there's a decent chance that over time, over the course of the next 20 to 30 years, more and more things will become decentralized. But, you know, for a variety of reasons, including the desire for the existing big guys to not let control go of these kind of things, it's not going to happen overnight. And so what we're much more interested in at Rize, and I think is that intersection of things, which is how do you start allowing the kind of intersection of traditional finance with decentralized finance to happen in a much more seamless fashion, right? Because you're always going to need, for the foreseeable future, on-ramps and off-ramps for money to move from the fiat world over into the crypto and decentralized world. You're starting to see things like in conversations we're having with some of the big kind of crypto players on things, they're starting to say things like, look, crypto at this stage is not really like people aren't using it as a payment mechanism first and foremost, right? They think about it much more as an asset class. And so how do you start to blend these two worlds where maybe you can issue a credit card or a debit card where you're paying for, you're using it for your normal fiat day-to-day fiat currency transactions, but you're getting the rewards in the form of crypto, right? So you're finding ways, through kind of roundups and rewards to be able to build more and more of an asset base over in the crypto side of things. And so, that's a situation where you're taking something that's very familiar. You're not asking for any major behavior change. You're not asking for people to start paying in crypto or going and using like a crypto ATM or something like that. You're just doing something that you normally do, but it's giving you an easier and easier way to start playing in that new universe as well, right? That, I think, is where things are really going to drive over the course of the next decade, which is how do you smooth those transitions between those two different worlds? And then at the same time, you're going to find newer and better ways to build a lot of things, whether it's insurance contracts or what have you, in the DeFi world, which can, I think, will accelerate some of what's happening with some of that transition, right? So, we look at it and say seamless interoperability. If you think about crypto as maybe like vertical number 5, if you had banking, brokerage, lending, insurance, now you got crypto and DeFi as well. Well, the overall goal is to get all of these things to operate in a seamlessly interoperable fashion where you don't have friction between those different worlds. And I think, crypto is just one of those ones that's moving that much more quickly and forcing a lot of innovation and change, which is great.
So I think that clears out that box. It looks like we have around 7 minutes left, so I'll make sure that we cover all of the questions that we have, both ours and the audience's. So perhaps wrapping up on the trends and predictions topic, which you mentioned, what I heard you mention during this interview is that all of the neobanks that are not so small right now are taking up a lot of the space, a lot of the market share. Is it a logical conclusion that we will not see many more of those created to compete with each other, but rather we are transitioning into mergers and acquisitions time?
You mean from the kind of again, those neobanks out there? I don't think that there's going to be a lot of, or maybe any new, what I would call generalist neobanks, right? We're very kind of broad-based, hitting for a wide audience on things. I think that the time for those kind of companies launching has passed, because you look at a bunch of those, really what they were able to do was to take advantage of a time when there was a lot of green space in fintech and customer acquisition was cheap. All right. And, there were rumors of Acorns back in the day here in the States being able to acquire customers for $2, right? And now acquiring a real direct deposit banking customer who's going to put money with you is going to cost you, $100 to $200 or so. And that fundamentally changes the economics. So you've got to be able to get customers who are going to stick around for the long run. And I think the way that you do that now is kind of what we talked about, which is you're coming in and building neobank experiences for much more niche audiences where you can do a much better job of really meeting a specific and unique set of needs. I think, will there be some consolidation in and around the space? Maybe. I think there's a set of neobanks and others that have reached a certain scale where, maybe the economics will work out for them on a long run basis and they stay independent companies, or maybe some of them will be bought by big, maybe more traditional financial institutions who realize, I've got to find a way to get into this universe, and I'm terrible at innovating. So we're gonna partner up around some of these kind of pieces. Maybe, if you look at the reason that you're normally going to buy companies, it usually tends to be one of 3 things. One, you're looking for real revenue, right? Particularly if you have if you're trading for a big multiple. If you're trading for 70x and you can go buy a company that's got 4 million of revenue, that's a good trade, right? That's not necessarily going to be the case in the fintech world, because a lot of these businesses are still figuring out how to monetize at a big level. Option number 2 is you're buying because you want real capabilities in the team that people have put together. It's a very difficult recruiting environment, so that could make a lot of sense. And the third reason that you're buying something is for the set of capabilities that they bring to the table. A unique set of technology and things along those lines. I think that's less likely to happen in the consumer space, But in the B2B space, I think you probably will see some consolidation where people are picking up specific set of capabilities that they want to be able to add into larger platforms and things like that. So early to say, but consolidation always happens at some point around this stuff, right?
You said $2 for a user acquired.
Back in the day, that was the rumor back in kind of 2014, 2015, that they were able to acquire customers for that little.
Because right now you're looking at, for a non-paying customer, like 10, 20, more or less would be the average. Whilst if you're getting into any user who's either paying something on subscription or transferring money into the service, then we are talking hundreds, if not thousands per user. So good job on good luck, anybody who was doing that for $2.
Timing, like so many things in life, timing is everything, right?
Right. And we have this question from the audience. I'm curious about that as well. The pandemic and health regulations it caused resulted in a boom for digital acceleration services. That we know. What's your secret sauce for attracting top tech talent, especially when there's such a high demand for engineers and tech experts? Because you as Rize, geographically, you're based where?
We are ostensibly based in Northern Virginia, outside of Washington, D.C.
Oh, okay.
But we're a fully remote company at this point. So I think the first answer to this question is, pre-pandemic, we were a small team of like 13 people, all of whom got in the office every day and enjoyed spending time together. And post-pandemic, we have employees across 15 states, and we're nearing 40, and we'll be kind of 50 plus here very shortly. So I think the first answer to that is the flexibility of being able to be fully remote means that we are able to go and acquire talent wherever that talent might be, wherever they want to be, right? And certainly it's a big boon for them to say, I can work with Rize wherever I want to be, at least in the United States. We're not international yet, though we're slowly but surely looking at some of that kind of stuff too, right? In terms of being able to work with people who are based overseas. That's been huge for us because I think really the best talent out there is looking for that flexibility in terms of where they're able to base themselves, and also knowing that they don't have to stay in any one place. They can move themselves wherever they want to be. And I think beyond that, it is we're solving a pretty interesting and very hard problem, which has a lot of appeal to, I think, particularly top engineering and talent around that kind of stuff. Something they can really sink their teeth into, and that's starting to have some big impact, and having, they can start to tangibly see how this is going to, leave a dent in the universe in some fashion. And we've been able to build a really strong culture at the company, despite the fact that we are fully remote. And I think kind of get stellar marks from when people are going through an interview process and just seeing how happy everybody is to be working at the company. I think that goes a long way. But there's no question it is a difficult recruiting environment right now. Really the hardest recruiting environment that I think anybody I've talked to has ever seen. Right. So tackling that talent becomes a key piece for us, right?
So I'm ashamed and guilty to say that we are enjoying this conversation so much that we are running out of time just now. I want to make sure if we're not overlapping with any call that you might have had scheduled after this, or if you do have a couple more minutes.
Well, I can go for a couple more minutes here.
So a couple more minutes is all I need, because I just have the two closing questions that we ask every guest that graces up with their presence. Your decision-making framework. Any tips that you could share with other leaders, founders, C-suite? There's no right or wrong answer. It's just your answer, essentially, of what is the rule of thumb that helps you go through the day or unlock something that potentially could be complex.
There's a lot of stuff that's put out there about making decisions quickly, right? And I feel like the entire journey of building a business is kind of like going from things that intellectually, right? Because we've all read the same blogs and books and that kind of stuff, and then actually experiencing something for the firsthand and realizing, oh, that's why it is, right? And so I'll give a slight twist to the decision-making framework, which is we certainly push ourselves to make decisions more quickly, to kind of follow the Jeff Bezos's like 70% rule, right, around decision making. But maybe the piece of advice that I'll give is, like, for example, in 2021, we were really pushing ourselves around, say, some of our big product swings, just to say, let's not build this massive business case. Like, if we know the answer, like, let's just go. What we forgot in some cases was just because we're making a decision quickly doesn't mean we forgot that we needed to kind of take a step back and really communicate very well to the rest of the team, the rest of the company, why we're making a decision, right? So it may have been, as we were making a big decision between two different things we were going to do on the product front, we kind of knew what the answer should be. Instead of spending a lot of time on it, we just said, let's go. What we really needed to do there, and something we're pushing ourselves to do more now, is to say, okay, it's great. We've made the decision about which path we're going down, but we really need to communicate to the wider team the why behind what we did, why we chose to do this and not to do this, and to give everybody the context they need to not only know that why this is a priority, but as they're kind of actually executing on things, they've got the context in place to be able to make the right decisions about how they spend their time, right? So communicating, even when you're moving fast, is hugely important, right?
True. So the last question. I am handing you a magic wand, a virtual abracadabra for you to wave and cause that every 12-year-old is blessed with the education on what? We have heard emotional intelligence. We have had design thinking, financial prudence. We have heard let the kids be kids, stop teaching them stuff. And there's no right or wrong answer. Once again, there's just your answer. So,
yep. I'm actually going to give you two things, right? I've been thinking about this. The first is empathy, right? I think it was Henry David Thoreau who said, I'm probably going to butcher this, it's something along the lines of like, could a greater miracle exist than the ability to see the world through each other's eyes for even a second, right? The ability to actually understand where somebody else is coming from, their worldview. I mean, we're such a polarized and divided, not only country here in the States, but around the world right now. The ability to actually take a step back and think about somebody else's worldview for a second would, I think, go a long ways, right? The second thing that I would love to do with that magic wand is to really enforce for people that it's okay and even a great thing to change your mind about something when you're presented with new information, right? Again, going back to that polarization, people get so stuck in their ways right now, and it becomes such a part of your identity to dig in on something. It's okay. It's great. How often are you actually going to be completely right about have all the information you need to kind of take a position on something right off the bat? The reality is, as you learn new stuff, like adapt and be willing and confident enough to say, maybe I was wrong about that, right? Or I've learned something about it. If we could get to that point, I think we'd also solve a lot of the problems that we have sitting out there right now. So those are my two things: empathy and the ability and willingness to change your mind when you learn something new, right?
Yeah, some people would much rather catch COVID than cognitive dissonance on the second part. And on the first part, I don't remember who was the author of that quote, but we're talking Greek mythology here, that the ability of the characteristic of a intelligent individual is the ability to entertain a thought without accepting it. So definitely, if we only all could. Justin, thank you so much for the information dense yet in a very acceptable form for even someone not technical interview that we have finished on a slightly philosophical note. I'm highly appreciative of the past hour. So is our audience. Just wondering if there are any closing remarks or if this is the moment where we thank each other. And
I think I would just say thanks for the opportunity. This has been a ton of fun, and I'd be happy to come back anytime. So thank you to you, and thank you for the audience for tuning in today and for some great questions.
Thanks goes all to you. Pleasure is all ours. And we do some events that are not just one-on-one interviews. So if you're ever up for a panel about fintech, I'll call you.
Give us a shout.
I will. Thank you so much, Justin. And thank you, our dear audience. And in the meantime, we will be expecting you not same time, but same day next week, every Tuesday. Disruption Talks, next episode coming soon. Thank you for tuning in and see you next week.
Take care, everybody.